Guys, thank you for joining us. This is Rob Bergeron. I'm a realtor with Housing Associates. Today we have Bobby Clifton with CrossCountry Mortgage. Bobby is a consummate pro, and he's probably the only person that actually follows all their follow-up and rules and everything they give themselves. He has his Tuesday calls, his Monday. What is it? Monday. But we'll get into it because I think it's kind of amazing. Like if you're a wholesaler, you should really, if you had the work ethic Bobby does, you would just kill it. But first and foremost, I want to say anything that Bobby and I say are strictly our own opinions, not necessarily anyone else's. It's TW's birthday today, so happy birthday, TW. We hope everyone had a great Easter. I know it was kind of a weird one, but you know the effect is still the same, if you will. Okay, so Bobby, when did you get started in the industry?
I got started in the mortgage industry in 2001, a week before the 9/11 crash.
So Bobby not only started before 9/11, but he made it through with like no experience. Then he made it through 2008 as well. So here we are in our third big relative catastrophe. Bobby, what is going on in your world? And I know it's ever changing. So if you're watching this
Sure.
a month later, today's date is April 13th. So it could be totally different in a week from now. But April 13th, what's going on?
Sure. So about a month ago or so, once all this this COVID-19 stuff came out, it just created just a ton of changes. The first couple of weeks after the news came out, a lot of these states were getting shelter-in-place policies. The guidelines started changing for us. For example, appraisals, the way we're doing appraisals has changed. A lot of the investors we were selling our loans off to a month ago, they're no longer buying loans. And part of that's because of that $2 trillion stimulus package that was put into place. There's a part of it that has part of it goes into some detail about forbearances. If you're experiencing a hardship from COVID-19, you can potentially just press pause on your mortgage payment for a few months. So a lot of the investors have kind of started pulling back, especially some of the government loans, and aren't lending, or they're lending, but they're raising the bar so high that you can't, it makes it impossible for somebody that wants to do a government loan, like an FHA loan, a VA loan, a USDA loan, to get financing. So it's changed some of that. We've seen some huge changes. A lot of our loans we can sell directly. We're a seller servicer of Ginnie Mae, which is the government. So we're having to sell all of our loans directly to Ginnie Mae versus going through an investor currently because of just because of all the guideline changes and because of this forbearance policy that was put in place over the stimulus package.
So let's first harp on the appraisals. So I guess they're doing drive-by appraisals at this point?
Yep. So most of the loans on purchases, Fannie and Freddie are allowing for drive-by inspections, or it's a 2055 exterior only appraisal. It's typically not used that much, but due to the situation we're in, the Fannie and Freddie are allowing drive-by appraisals. And on refinances, depending on what kind of refinance it is, a lot of them are allowing it on refinances too. And now the government's followed suit. So Ginnie Mae, FHA, VA, USDA, they're all allowing for drive-by appraisals.
So have you had any issues with people disputing them? Like, are you only doing those with properties that have interior pics or a virtual tour? Or are there any other rules for the drive-by appraisals?
Wait, can you repeat that again?
Okay, so I know that Joe Worth and we just had to fight an appraisal. Like, are you having any people fighting the drive-by appraisals if they come in lower than their actual appraisal?
Yeah, that's a good question. So what I've been telling most of my clients, if they're, whether it's a realtor, if I've got a buyer who is selling a house, what I've been making sure they know is make sure if you're selling a house, or if you're a realtor listing a house, or if you're buying a house, we want to make sure the value is going to make it if we can. So we need to make sure if there's any renovations done on the inside of the house, anything that's any part of the value of the house, if the appraiser can't see it, they need to know about it. So pictures, make sure you can give them a phone call and say, hey, I renovated the bathroom, I've added some living space, I've updated the kitchen, whatever that is, because that is a real concern. You could definitely potentially have more appraisals come back short because the appraiser can't get in the house to see it, especially if it's a house that's been remodeled or renovated recently.
Are you forecasting appraisals to start coming in lower because of the state of the market? I mean, we're not going to feel those effects right away just because, we're still using the same 60, 90 days for the appraisals, but are you expecting that to happen?
No, we haven't seen any yet. We've had a couple of times. I've had a couple of times I've had the listing agent make sure they reach out to the appraiser or vice versa, just to make sure they give them as much information as possible. Luckily, up to today, I haven't had anything come back short, but I could definitely see it being a concern.
Now, if the house is vacant, though, they'll do a standard appraisal on those?
Yeah, if the house is vacant, we've been basically just doing full appraisals, and there's not really you don't really get a huge break in cost paying for a full appraisal versus an exterior. So if the house is vacant, we've just been doing a full appraisal. I've also been doing a full appraisal if the seller wants to have a full appraisal done. We've been ordering them, but in most cases, we've been doing exterior only just because of the coronavirus situation.
Yeah, that makes a lot of sense. Would you say right now would be a good time? I know Bob Gerwin was talking about it, and I was talking about it, I think, with Frank or someone like that. Right now would be a good time to maybe move your 30-year mortgage over to a 15-year fixed?
Yep. Yeah, I actually just sent a video out this morning. A lot of my clients right now that bought houses a few years ago, or anybody for this matter, if you have a 30-year fixed and you potentially think you might be in the house longer than expected, it's a great time. I got into business right before the 9/11 attacks, and the rates have never been this low, really, since that time frame. So if you're at a 4.5 on a 30-year fix, you could potentially refinance to a 15-year fix. The rates are in the mid-2s. Not maybe equal the payment, but you get really close to keeping your payment at the same level and just cutting the term in half, just because the rates are so low right now.
Yeah, which is great. I mean, I knew who was it I was talking with? I don't remember who it was, maybe Joe Worth, but they were saying like not a month before all this started happening that like 60 and 90-year-old or 80-year-old people were getting 30-year fixed mortgages.
Yeah.
The market was so good that they were willing to take that chance. So is your primary issue that you don't have, so when you sell something, like you get a mortgage, you get a contract and everything, you already have it sold before the closing, typically, like you already have an end buyer?
Not typically. We'll sell the loans off after. We have several different investors. Right now we're locking basically with agency, which is Fannie Mae, Freddie Mac, or Ginnie Mae, just because a lot of the investors that we have, a lot of them are just kind of pull back a little bit right now. So we're selling everything directly to the agencies. And so we really don't know who the investor is going to be. We sell our loans off, a lot of them, to some of the bigger banks, Chase, Wells Fargo, Mr. Cooper, which is formerly known as Nation Star. There's a whole bunch of BB&T and several that smaller lenders that will buy some of our loans. But in most cases, they're sold off a month, 2 months, 3 months after we close.
Okay, so what are the long-term effects you think that'll happen in the mortgage industry
with the coronavirus situation?
Yeah.
One thing, so as I mentioned earlier, when the rates, so about 30 days ago, maybe 45 days ago, the rates were about a half point higher than they were now. The Fed is doing everything they can possibly do to keep rates low so the economy doesn't freeze up. One of the things they've been doing, it's called quantitative easing. It's similar to what they did back in 2008 and 2009, although I think back then they were a little bit behind. I think now they've kind of really gotten ahead of themselves. So they're buying tons of bonds. A couple weeks ago, they bought, I think it was $250 billion worth of bonds. So they're artificially keeping long-term interest rates low by doing that. So bond prices go up, interest rates go down. They teeter on opposite ends of the spectrum. When they do this over and over again, at some point, once we come out of this, they're going to have to sell the bonds. Rates are going to go up. So one long-term consequence of this, I think, you're going to see rates start to drift up maybe towards the end of the year or as soon as we get out of this or we get to a safer place. But for right now, I think rates are going to be low. We've had a lot of clients that have been either in underwriting, just wrote offers on houses, or actively shopping that have been either laid off or expected to be laid off, furloughed. So one of the long-term consequences, I think we're going to see a lot of these, just obviously higher unemployment, and a lot of buyers who were expecting to buy may not be able to buy right now because of the situation that they're in. So I think low rates for a while. I think we're going to see some buyers and sellers having a difficult time selling or buying just because of their jobs. Although a lot of the guidelines are changing, they're trying to make it a little bit more flexible for buyers who, if you're going to come back to work in a usual time, there are some programs that are letting us get some explanations from employers and things like that if they're coming back in a month or two with temporarily laid off. So those are two of the main things. Guidelines, a lot of the mortgage insurance companies that insure loans that are over 80%, they're changing their guidelines. Some of the premiums have changed a little bit. For example, you can do a cash out refinance over 80%, but now the mortgage insurance companies are saying, hey, that's great that Fannie and Freddie will do that, but we're not going to issue mortgage insurance. Or investment properties, somebody doing a deal on the secondary market, you can't get mortgage insurance for those if it's a Fannie Mae or Freddie Mac loan. If you can't get mortgage insurance on rental properties right now. So we're seeing a lot of stuff like that that's and it's changing daily. So some of the things that we saw last week might not be in place this week.
So I've heard too that mortgage insurance has gone up in price as well. PMI.
Yeah, mortgage insurance has gone up. They've changed some. They're just getting tighter in trying to react to this, because if it gets, if this situation goes on further and further, it's going to put more pressure on the housing market. It's going to put more pressure on, just a lot of stuff. People out of work for 6 months is way different than somebody being out of work for a month and a half. So they're definitely tightening up the guidelines on loan to values, mortgage insurance, some of those things.
So I have a lot of clients who flip houses and then list them on the market. What questions should we be asking from potential buyers to make sure that we're covered and we're not picking the wrong buyer in a multiple offer situation?
Sure. So if you got a buyer, if you're flipping a house, you've got a buyer who's using traditional financing. That's whether they're doing a loan with a bank or a credit union or a mortgage person. Some of the questions, make sure you ask. Make sure you know what the buyer does for a living. Right now, there's a lot of jobs that people are still employed, but they might not be employed in a month or two. So make sure you know what they do for a living. I've been asking a lot of my buyers that are selling houses, if they're taking offers on a house, see if they can get a commitment on a closing date from that buyer. And the reason why I say that is I think the buyer who's going to commit to a closing date is a lot less inclined to try to back out of a deal at the last second.
So instead of writing a time frame, you pick an exact date.
Yeah, try to hit a date instead. Okay. That way I just think that they're going to be much more inclined. They're going to be less inclined to try to back out of a deal if they know they have a certain date to hit versus a wide range. Those are the two main questions. Another thing too, maybe make sure they know, how long ago it was when they got pre-approved. As I mentioned, some of these FHA loans, VA loans, USDA loans, the investors are pulling back from offering these programs. That's Wells Fargo, Bank of America, Chase. So just make sure the pre-approval is super updated. Like you want it probably within the last week or two. If you got somebody out there who has a pre-approval letter from 2 months ago, it's probably not worth anything right now because everything's changed so much. So pre-approval letters, making sure you know what the buyer does, and then having them commit to a closing date. I think of the three things that would guarantee a smooth transaction and make sure you're going to close.
Yeah, that's all wonderful advice. We've got a few questions already. So Frank Miller, former president of KREIA, just asked, should us as sellers and investors agent push more clients to buy conventionally, like try to get more conventional loans?
Yeah, I think if you got a buyer that's a good question. So if you got a buyer who the conventional loans, there's more investors out right now, but conventional or FHA loans, a lot of these investors are just not offering good pricing. So like, for example, mortgage brokers are having a really tough time right now because they're not direct seller servicers of any of these agencies.
Mm-hmm.
So whether it be a conventional or an FHA loan, it's definitely going to be difficult if the buyer's working with a mortgage broker, because they don't service loans. But to answer your question, I think the government loans are going to be more difficult for an investor to do than a conventional loan. There's still investors out there, but we're selling all of our stuff basically directly to Fannie Mae and Freddie Mac, just because it pays better. So say, for example, when we do a loan, we get paid a yield spread premium by that investor when we lock the rate in. Well, right now, when we lock these rates in, the premiums they're paying are so low, they don't cover anything. So we're having to charge like origination fees and just costs on top of the normal costs, like for an appraisal and underwriting and title fees. If you go directly to Fannie Mae, Freddie Mac, Ginnie Mae, you don't have to do that. They're paying still a premium that will cover, what we need to make sure we're profitable. An investor's not. So that's the difference kind of right now. But the FHA investors are really seeing a problem with them. They're basically just pricing themselves out of the market and don't want anything right now. It's
trapped.
There's no appetite for it.
Would you say now would still be a good time to refinance on a lot of rentals that you own?
Yeah, I think refinancing, the rates are super low right now. You can still get great rates. It's just whether it's a rental property or primary residence, obviously the rates on rental properties, investment properties are going to be a little bit higher, but the guidelines are still applicable. You got to have a little more equity in a rental property than you do a primary, but rates are really low. On 30-year fixed investment properties, you typically want to see at least 20% equity in the house. You can get a rate, you're talking like mid to upper threes. Where on a primary, you're looking at, low threes.
Which is just incredible.
Yeah, super low still.
And if you refinance from like a 30-year and take it to a 15, you're probably going to pay about the same amount, but you're going to be straight cash flow in 15 years instead of waiting, 30 years. I don't know. There's a lot of value. Stacy Duvall, agent, KREIA member, asked, what is the forecast for investors? I know we kind of touched on it, but I mean, what do you think is going to end up happening to the investor world? I mean, you got to think if people can't get pre-qualified, there's going to be more renters out there.
Yeah, I think there's going to be more rentals out there. I think I own some rental properties myself, so I've been fortunate. My tenants none of them are unemployed because of this. So I think that's obviously one concern right now. You got tenants that are unemployed. I think Airbnbs right now are going to be tough, obviously for obvious reasons. Most of them can't operate. So I think they're great. I mean, I think right now it's a little bit more challenging, but I do think there's going to be more inventory available.
Which should be good. I mean, the more tenants we have, the better for our rentals. So, I mean, I think the commercial market's about to get really beat up. I mean, people are working from home now. So maybe some of these bigger companies are realizing, man, we don't really need all this office space. And you have these small businesses that are going to be struggling. Do you think the commercial industry is just going to get rocked?
Yep. Yeah. I don't do any commercial loans, but I would say the commercial side of things has changed a lot as well. And right now, I think they're all busy with these PPP loans with the SBA. We
did have a commercial lender that was going to come on today, but he is dealing with all that stuff right now, and that's why he couldn't come on today.
Looking at some of these other questions here. Turn times. I think somebody asked turn times on loans. So that's another good question. We locked more loans this last month than I do typically in 2 or 3 months combined. So there's a lot of people inquiring about refinances. So it's putting a ton of pressure on underwriting in banks in general. I think a lot of people are under the assumption when rates were going up and down, like yo-yoing a few weeks ago, I think a lot of people thought that banks were raising their rates because they were so busy they couldn't keep up with the demand. But it's definitely causing a problem with turn time. So we prioritize purchases over refinances. Typically close a purchase in 21 to 30 days, depending on how long the inspection goes and some other third parties. Refinances were 30, 35 days. they're like I said, they're prioritizing purchases just because they're on a time frame, and we're just locking the refinances for 45 days. But the turn times are not that bad right now. But if this keeps up, they could potentially get slower.
So Bobby is someone who really invests in himself. He works out like a crazy amount. He's got coaching. He reads. Bobby, what are some things you're doing on your end to stay in front of your clients? And because people can apply this to wholesaling, they can apply it as realtors. What are you doing? And could you tell people a little bit about some of your systems that you do that really help you stay top of mind and generate a lot of business for you?
Yeah. So one thing that I do that keeps me top of mind, I do theme days. So every day of the week, I'm doing something differently that keeps me in front of people. A couple of the things that I do weekly it keeps me organized as well. On Tuesdays, so tomorrow I do status updates to all my buyers agents, and listing agents on every deal I have, and my borrowers on refinances. So that just keeps me in front of people, keeps me organized, keeps them from having to call me. So I'm making proactive outbound phone calls every Tuesdays. Wednesdays, I check in with all my pre-approved buyers unless they don't want me to call them. So I'm calling, making sure they're still employed right now, making sure they don't have any questions. There's so many changes right now with loan guidelines, just loans in general, investors. So just following up, making sure, hey, how are you feeling? A lot of them are having probably some anxiety over this whole situation that we're in. So just staying in front of them, making sure I can help them out. And then Thursdays right now have been huge for me. I'm calling past clients right now, just making sure they're in a good position. They don't need to refinance or have questions about rates and things like that. So those are a few of the systems I have. We're right now creating more systems with some of the free time we have. Just putting like little touch points in place for our buyers throughout the process of making the experience good. But there's all kinds of different systems we have. Like we started sending out tape guns. When we get a contract come in, moving boxes, moving tape guns, like stickers, like room stickers, send those out when we get a contract. We're starting to send out pizzas. Before the coronavirus epidemic or pandemic, we were sending out like pizzas at move-in date. So sending out pizzas to our clients who are moving in that day. So just things like that, little touch points, keep us in mind. And I think it goes a long way when they, talk to somebody who might need to buy a house or refinance. It definitely keeps us in front of them.
Are you?
Or am I lying?
That's funny. How fancy. So are you having to verify employment, 48 hours before closing?
Yeah, that's a good question. So verifications of employment are another one. As long as we can get somebody from the employer, the employer's office, whether it's HR or somebody that they know that we can like either Google or 411 their name. We are verifying employment. Some of them are taking longer to come back than others. We're verifying employment the day of closing too. And I know some investors on refinances are even verifying employment after a refinance closes because there's a 3-day rescission period.
Oh, wow.
One other thing too, on not on verifications of employment, but for self-employed borrowers, we typically have to use a 4506T, which is a document, it's a consent for tax transcripts. Well, the IRS offices that do these are lagging like way behind because they're closing offices right now. So a lot of the investors in Fannie Mae and Freddie Mac are not requiring tax transcripts on for self-employed borrowers. Basically, those are just, we need the tax transcripts to match up with the tax return, make sure they're the same. Anybody can create tax returns, so we've got to verify the transcripts. Through the transcripts of the tax returns we have are the actual ones. So those are, right now we're not having to do those. Fannie and Freddie have kind of excused that for the time being because they've closed the IRS has closed some of their offices.
Well, I know Chase mentioned that they're changing, what they're looking for on credit scores and whatnot. I mean, what you used to be able to buy at 580 up to 620. I mean, what are you seeing now for credit scores?
What was the question? Credit scores?
Yeah, like what are you requiring for minimum for buyers at this point?
Right now, so the government loans, we like to see at least 620. We can go down low. I know some lenders are putting in like price adjustments or overlays, like not taking anything under 640 or 660. We're pretty much business as usual as far as credit scores go. However, the higher the credit score, the easier the loan is going to get to be able to get done. It's just a lot cleaner process. But we can go down. I got one right now. I think it's like 605 or 607. FHA buyers putting down 3.5%. Anything under 600, I know the FHA will go down lower than that, but most of the time it won't. It's not approve eligible, so it's kind of a. They say they'll take them, but the investors won't fund them. So 620 is what I like to see. If it's under 620, we can do them from time to time. They've typically got to have some compensating factors like reserves or length of employment or some stuff like that.
Stacey Duvall mentioned that she's been writing into her counteroffers for the lender to order the appraisal within 48 hours of the contract. Would you also agree that's probably a good move?
Yeah. I think the appraisals are definitely taking longer right now because of the number of refinances that are going on. So yeah, I think if you can get the appraisal orders the quickest, that's what typically slows deals down, is if the appraisal is not ordered. Everybody's kind of waiting around for the appraisal to come back before we can close. So the quicker the appraisal, my concern most of the time though is the buyer's agents wants to wait to get the
inspection.
Get through the inspection. But if we can get them ordered, the quicker the better. The quicker the deal is going to close. Right now, even the drive-bys are a little bit slower right now. We've got like panels on so when we order an appraisal, we've got to go through a management company, and we can pick what appraisers we want on our management within we can pick our panel of appraisers that our management company can send the orders to. So if I've got, say, 4 or 5 appraisers that I'm comfortable with, if they're busy, the problem is I've got to wait in line for them to be on busy, or I can send it to somebody I'm not familiar with, but I like to have some kind of control over it. So typically waiting a little bit. So if we can get the appraisal ordered sooner, we're not going to experience that delay.
Brian Hasley brings up, do you think there's a lawsuit like just waiting to happen with discriminating based on job employment? Just because right now, so many of these jobs are kind of fickle. It's like it's really hard to, know where that job's going to be in a week or 2 or a month.
Yeah, I don't know. That's a good question. I've got some buyers right now that, like, I've got even like self-employed borrowers. Like, I've got a couple borrowers right now that are photographers. They're obviously really slow right now. A lot of it's going to be underwriting discretion. If they feel like photographers who are doing like wedding photos, they're probably not making a whole lot of. They're probably not really busy right now. So we're asking to see a P&L and like a budget, and there's a bunch of other documentation and explanation from the client. But as long as they're employed, we really can't not do the loan. If they're furloughed, if they, like, I've got a couple clients right now that are physical therapists. They can't work right now. They expect to come back beginning of June. So in a situation like that, if we know they're going to come back at a certain date, we are okay with that, but we're going to have to get a letter from the employer, and then we're going to have to get pay stubs as like a trailer condition, like post closing. So we can go ahead and get the loan closed as long as we have a letter from the employer that the employee is coming back at whatever date. But we've got to get a pay stub after that, so we can't fund the loan. We'll basically fund the loan, or not fund the loan, but we'll sell that loan off at a later time, because we've got to get like some conditions from the employer once the client comes back to work. So we're trying to work. There's things we can do to kind of work through some of these problems, but some of them are going to be difficult. Like if you've got a client who just gets laid off, they don't know when they're going to come back. It's just difficult.
Yeah, it makes it tough. Eric's wondering, what are the rates on a 15-year jumbo fixed right now?
That's a good question. Jumbos right now are tricky because of the investor situation. I said there's a lot of investors right now, they're pulling pricing back, so the rates are not as good. Before the pandemic, a 15-year fixed jumbo was around the same as a conventional 15-year fix, like
275,
upper twos. Right now, I'd say they're probably the same, maybe a little bit higher. because of a lot of these investors are not, they don't have an appetite for that product. In fact, I had one right now. I had one last week. I priced out in California, and the pricing was not as good as they normally are because you don't go through Fannie Mae or Freddie Mac with those.
So, Bobby, you can do any state then, right? Servicing.
Yeah, I can lend in any. Yep, I can lend in any state.
What is it right now for like a 30-year or long-term rental?
Like a 30-year fixed conventional.
What, like for a rental property, like 4?
Okay, so if you can put 25% down on a 30-year fixed rental, you're going to be looking at upper 3s.
Okay, so and if it's like 15, you're probably like
15, a little bit lower. Yep. Yeah, and if that's with somebody with good credit. Like I would say, probably over 740.
Okay, I'm going through questions. Do you think you're gonna? Okay, so Frank Miller, former president of KREIA.
Yep.
With you being on the mortgage side of things, what is your opinion of the future of the mortgage market? Possible defaults, possible higher rates, outlook for the next year?
Yeah, good. That's another quick question. Yeah, so I've already had several of my clients who are like doing refinances right now that are aware of this, the forbearance. So basically, the Fed came out, part of that $2 trillion stimulus package they passed. If you're on a government loan, you can, if you're experiencing hardship, you can forbear on your mortgage. Well, the problem with that is these investors don't want to fund these loans because they don't want to fund the loan and then not get paid back because they've still got to pay. They've got to, if you're servicing a loan, you still got to pay investors. So, yeah, I definitely think that there's going to be I definitely think we're going to see a spike in defaults. I think right now they're trying to keep everybody in their house and offer some concessions. But if the longer this goes on, the longer I would say that we're going to, at some point, some of these investors are going to have a liquidity problem if they don't have people, paying their mortgage payment. So depending on how long this goes, I can definitely see a problem. Maybe not to the extent of 2008, but yeah, I would say that for a fact, the longer this goes on, the more it's going to weigh on servicers and
more short sales.
Problem it could cause.
Bobby, what do you think the value right now in working with an established lender that's been around the block for a while, realtor? I mean, what is the value in having more seasoned people around you?
Well, I always tell all my buyers, you want to work with a realtor who's full-time. They're typically great negotiators, mitigators of risk. I put a buyer in the best position to go from start to finish with the least amount of problems. There's a lot of third parties involved, and you just want to have a realtor who's seasoned, who is full-time. If you got a question, they can help out. You want to make sure they have a good relation, or I guess a good name for themselves in the community. And the same thing for lenders. You want to make sure you have somebody who's full-time.
Boots on the ground.
Yeah, communicates well, communicates effectively. A lot of my clients too, I meet with my clients, not right now, but before coronavirus, meet with them, kind of go through the process, set expectations, and just hold their hand from start to finish. And we've got systems in place. The more loans you close, the harder it is to meet everybody face to face. But there's a lot of things you can do to kind of offset that.
David Green, host of Bigger Pockets, he is kind of a savage in regards to that. Like, he only does exactly what he needs to, and he delegates everything else. So
yep.
I mean, when you put systems in place, I mean, rock stars want to work with rock stars is what David Green always says. It's almost annoying how much he says it. All right, so Bobby, let's do a hypothetical. So let's say this coronavirus, rolls out in like a month from now, and it's done. Like, we're starting to get back. Do you think we're going to have a bottleneck for people wanting to move? Do you think that our busy season is going to go a little bit farther, maybe into November? I mean, what do you think is going to happen?
Yeah, I think that a lot of the slowdown this is causing right now, I just think it's going to push it out. So I think we're going to have a busy second half of the year. I think clients who are second guessing buying right now or listing a house right now, a lot of them, once they kind of I think most of my clients that are buying are having to sell, and a lot of them right now are not selling because they want to see how this plays out. So I think the sooner we can get past this and go down the other side of this, I think we're gonna have a lot of pent-up demand. And I think once people start going back to work, things are going to go back to somewhat normal. I think we're going to have a late summer, fall boom, because if you're going to sell a house, if you want to sell it now or later, you're probably going to choose later just because there's so many questions right now. So I think we're going to have a great second half of the year.
Well, and you guys got to think. I mean, we've already had a steep decline in realtors. I
Yep.
mean, you're going to see some of the smaller title companies phase out a little bit too because they weren't able to, adapt to being able to do digital and whatnot. And then you're going to see mortgage lenders kind of phasing out. So ultimately, we're going to get a more professional experience within the industry, and it ultimately could be a really great thing. There's going to be a lot of good that comes out of all this, a lot of opportunity. Let's see. All right, I'm going to wrap it up, guys. Anyone have any last-second questions for Bobby Clifton? Bobby, while we're waiting, why don't you give your contact information if people want to reach out to you? You're going to want to say your number out loud and your email because the chat's not going to be here for the YouTube.
Yeah, can we type it in here?
No. I want you to say it.
Okay.
Yeah, Lauren, who edits our videos and does a great job, she can always put that in there.
Okay.
So yeah.
Yeah. So it's Bobby Clifton, CrossCountry Mortgage, and my direct line here. It's 502-253-9704.
What was that?
502-253-9704.
And what email is your best email to reach you at?
Robert.Clifton, that's Clifton, like the neighborhood, at MyCC, like Charlie, mortgage.com. Robert.Clifton at myccmortgage.com.
And you guys can always reach out to me if you need that information. I use Bobby on my own personal home. He does a great job. Jeannie is asking, I think this is Ed Gibson. Yeah, his thing's weird. Do you guys do HELOCs on rental properties?
No, I can't. We can do those. They're tricky. I've got to have a first mortgage backing it up. So if I was going to do a HELOC on a rental property, I'd have to do a first mortgage too. So depending on if you're just wanting a HELOC, I unfortunately am probably not the best person for that.
Okay, and then Glenn Nash is asking, just got a quote from my lender on a conventional refi for one of my rentals at 4.75. His credit is mid to high 700s.
Yep.
Did I hear you say you can get a 3.75?
Yep, the rates are in the low threes. Some of it's going to depend, Glenn, on the equity, how much equity you have. We probably need about 25% equity. So if you're going over that, the pricing does get higher. But if you've got a 75% loan to value or less, we can get you into the upper threes.
Perfect. A few housekeeping notes. One, John is doing a great job preparing our next KREIA meeting. We're going to do it virtual. It's going to be wild. Apparently, it's a whole thing. I'm curious to see how it goes. It should be really interesting. The next See You at Noon is on Wednesday, and you guys are the content. So the idea is it's funny now, but at the time it really sucked. So basically, I'm going to want you guys to get in the chat, send me a personal message, giving me a snip of what happened, and then I'll bring you on, set your video up, and then you'll tell your story, and then people can ask questions. So I'd love it to be like, all right, this happened, and I learned never do this. So I think it's going to be more relational. It's going to be factual. We're going to laugh. No one's going to be crying, hopefully, but it should be really good, and I think we'll have a great turnout for that. And if that goes well, we'll repeat that. David Green's agreed to come on as well for Bigger Pockets, but we're limited to 100 people, so I'm trying to figure out how that's going to work here. Once again, you can get a hold of Bobby or I if you have any questions. Thanks for joining us, and we'll see you soon at noon. Thanks, Bobby.
Later, guys.
See ya.